Hello, everyone, and welcome to Nichols Live Summit. I'm pleased to introduce their president and CEO, Sean Samson, as well as their VP of Exploration, Paul Davis. Sean and Paul are going to be taking us through a company presentation, and after, we're going to be going to a live Q&A session. So just as a reminder, feel free to submit any questions that you have to the chat on the right-hand side of your screen. And if you'd like to get in contact with the EVNi team, we're going to be posting up a survey link in the chat a little bit later. Feel free to fill that out. And as always, the summit is being recorded. It's going to be available on demand in the coming days, so look out for that if you want to refresh. Without further ado, Sean, I'm going to pass things over to you so we can get started.
Thanks, Cam. I just wanted to start with a bit of a preamble, a little different than usual. Then we'll jump into the slides. This week has been a phenomenal week for the company. Really pulling together this resource, updating the resource on W4 is a huge deliverable for us. In the past 18 months, when we started and got out the gate, beginning of last calendar year, we then immediately tripled our land package, which was a big development for the company. And we've been exploring and discovering, and that was a huge focus for last year with 3 big discoveries. And we saw that this year with the resource we came out with on the Carlang A zone. Again, that's just the first 20% of the 10-kilometer mineralized zone we know we have up there on the Carlang. And now what we're talking about this week with our release on Monday, and we'll speak about on this call, is around the W4. So that's our high grade track. So it's great mineralization near surface. We're really excited for what we pulled together. Our target was a doubling of the 2010 historical estimate, and we blew through that. So we're excited to share this with you today and go through those details. But it's an exciting time for the company right now in terms of we've got resources out on these 2 tracks. We're continuing to deliver on what we said we're going to do, and we're really excited for what's ahead now with the company. So let me just pull up our slides, and we'll cover some basic information on this call. And then, as Cam said, we'll take questions. There you go. So I'm going to hand off now to Paul, my VP of Exploration, who will talk through the W4.
Yeah, thanks, Sean. Yeah, very exciting week. Very exciting week. This is the culmination really of about 18 months of work put together by EVNi since we've acquired the Langmuir property back in 2021. So to give you an idea, we drilled approximately 23 holes in the W4 deposit during that period for about 8,000 meters of drilling. And really what we've done is we've made a few significant changes to the previous historical 2010 resource. One, we've identified that it's based on one horizon. So we don't have these 3 separate stacking events. But what we do see is we see structural repetition with faulting. But you can see from our resource modeling here that it's one continuous deposit that keeps going down. One thing I'll highlight is at the bottom there, it looks like it's cut off. That's not a real cutoff. That just is a factor of the modeling. This deposit keeps going down plunge, down deeper than the 500 meters that we've defined it so far to date. What I also like to highlight is the high grade core of the W4 deposit looking really good. The modeling was done on a total of about 23 of our holes and 47 of the old holes completed from 2007 to 2010, representing about 28,000 meters of drilling. What we've really seen here is that we've added a lot of resources here. And when we take a look at what it cost us per pound of nickel that we've added to the resource, it's like 9 cents per pound. So these are industry exceptional discovery amounts for the amount of nickel that we've added to it. We're moving forward with the permitting. We have an application into the Ministry of Mines to lease this property. So we're taking those steps forward to get everything in line to keep this project advancing and moving at a rapid pace to take advantage of this transition into the green energy.
And the MET work we're doing with SGS, we hope to have some results on that relatively soon.
Yeah, we're looking at results on the MET work that we've done just to kind of get a better feel for how this will react during a typical flotation type mill circuit.
So there's really interesting synergies here because just 7 kilometers away is a permitted operating plant, which one of our investors owns. So the Redstone Mill, which has a neat potential option for us. In addition, we're just a few hours north of Sudbury, where they're interested in getting more ore down into the Sudbury camp. So When we say we're going to be up and in production in 3 to 4 years, we're sort of pedal down on permitting, as Paul mentioned, and there are these other options for synergies which really could speed us ahead in terms of getting to production. Plus, there's a synergy with our neighbor, the same company that owns the Redstone Mill, also has another high-grade deposit. It's just 3.5 kilometers away. It looks a lot like the W4. There's probably a lot of opportunity there to work with our neighbor for shared infrastructure, for example. But the W4, we're excited about this. This was our target. Our target was really a doubling, and we beat that. So, Paul, do you want to talk a bit about the resource table?
Sure. Yeah, basically, this is our 2023 updated resource that we put on the books here, announced this Monday. And what I'd really like to show is that the distribution of measured to indicated to inferred, we're looking at about 72% is measured and indicated. So that's very good. That's coming in about 1.45 million tons, grading 0.98% nickel. Corresponds very well to the 2010 historic resource, which was about the same grade, 0.99. What else that we see is that we've really improved the indicated or the inferred as well. So we've more than doubled the nickel pounds. We're basically at about 2.7 times the number of nickel pounds measured and inferred, over 3 times for the inferred resource as well. So what we did is we really did demonstrate that our conceptual model of W4 held true and that we were able to expand the zone. I see a lot of potential to actually grow this further with added exploration, but this is a great way to really posture this deposit to move it ahead. 2 million tons is a good size start for this project, and I'm very excited to see where it leads, as well as being able to add these nickel pounds on the order of 31 million pounds of nickel just to measured and indicated to our books, in addition to our Carlang project.
Mm-hmm. So it's big. And when we talk about big numbers, though, something I like to do is to ground it in contained metal. How many electric vehicle batteries does that relate to? When we talk about our A zone resource, it's a number over 35 million EVs in the ground for the A zone. For the W4, it's about 300,000 based on today's battery chemistry in terms of number of EV equivalent batteries in the contained nickel. So it's really exciting. There's a huge amount of potential here. And that's our W4, the high grade, because I really think, and I spent the last 2 days in Ottawa having meetings with the federal government, and it's a huge challenge for us right now. I'm going to get real quick into the macro. We've talked about this before with investors, and I suspect that everybody's on the same page in terms of being a nickel bull. But as I have more and more of the meetings, I realize the urgency of stepping in on this. So, for example, on this slide, top left, pick your hockey stick in terms of the EV growth, but it is substantial. And if you look back over the past few years, the market has been beating these forecasts. So using those IEA forecasts of how many EVs are going to be sold, and then taking the nickel demand in those EVs, bolting that on to what's happening in the market, top right. So right now, nickel is all allocated basically into stainless steel. If you take a whole new demand category and put that on top, stack it on top of what's required for stainless, it's very material. Bottom left, when you stack up sort of what's happening out in the market, here's one forecast looking at a gap. I'll show you another demand forecast on the next slide. But this is a great place to be for a nickel company in that we've got an enormous amount of nickel in the ground. If I look, though, at the European regulation, it's not just about nickel. It's also about the carbon cost attached to the nickel. And this is really what I was talking about with government over the past couple of days. What's happening with the European market, and as of January next year, and the requirement for a declaration of the footprint on all vehicles sold, many people think that market, those rules are going to be reflected in other major consumer markets around the world. So this is where we're going, where the new demand, so this battery demand we're stacking on the global nickel market, is not just going to be about finding the nickel, it's going to be finding the nickel with the right carbon cost. And if I real quick, again, this theme of trying to talk about big numbers, here's Benchmark's forecast looking at 2022 supply. So 3.2 million tons of nickel were produced and sold in the market in 2022. Going out to 2035, based on Benchmark's forecast, that's a 3 million ton lift. So we need to find in the nickel business 3 million tons. It's such an enormous number. So let's try to break that down. Canada Nickel, our colleagues up in the Timmins camp, they're talking about 40 to 50,000 tons of nickel produced per year, right? So 45,000 of the 3 million requirement of tons of nickel that the market's going to need to find. If I think about Sudbury from the Ontario context, the Sudbury camp, the combined Vale and Glencore assets, Sudbury produces about 60 to 70,000 tons on an annual basis. So we in Ontario, especially across Canada, we think of Sudbury as being this big material nickel camp, but 65,000 tons on an annual basis when the challenge is finding 3 million tons. And again, you get to the 3 million if you believe in the EV forecasts and today's battery chemistry, the nickel intensive battery chemistry being the predominant chemistry of that forecast leads to requiring a big number. And again, Benchmark has a 3 million ton gap that we need to find that the world's nickel needs to be producing by 2035. So really what that means is 46 more Sudburys. So I've begun using an Oprah gif. Everybody loves the you get a mine, you get a mine. But the reality is every one of these mines needs to be developed. Or I should say every one of these projects needs to be developed into a mine if we're going to be able to deliver on 3 million additional tons in the annual nickel market. So I think it's useful to break down, and this is especially useful when I'm talking to representatives in government, for example, because it makes it much more real that we need to find, as an industry, 3 million additional nickel tons a year. And the quantum is incredible if you think about what that means in terms of numbers of Sudburys. So every nickel project should be getting developed. So let's just real quick look at nickel projects. So these are, in terms of in situ nickel pounds, with combining all of their contained nickel, the 10 largest undeveloped projects in the world. I'd mentioned Canada Nickel with Crawford, you see that on the far left. On a nickel equivalent basis, EVNi has the 5th largest. So the majority of these nickel tons, obviously, are the resource from Carlang A zone, our large scale, but we're on the board here as the 5th largest project. And again, thinking back to what industry needs to deliver, all of these projects should be advancing, but ours is the 5th largest. And it's interesting to see what the financial markets are currently valuing these projects at. So if I take enterprise value over resource ton, there's a huge range here. And there's a few that I don't even chart really, because it's so high in terms of what their enterprise value is over nickel resource tons. But the average across those top 10 projects is 143, and it's still in US dollars, enterprise value per resource ton, right? And ours is trading at $1. And we are also very cheap as compared to, Giga is double our value in terms of enterprise value over resource ton. Canada Nickel up in the Timmins camp, 15 times the enterprise value that we have. So this again represents the resource tons for our large scale, that's the Carlang A zone, which is very, very similar to the resource that Canada Nickel is advancing, the Crawford project. The A zone for us, though, is just the first 20% of the full Carlang. So I'm very excited about the resource we have. It is enormous, the billion-ton resource we have on the A zone. It allows us to talk about these slides in a global context. We're the 5th largest. We think that it's much, much larger going down the Carlang trend. So Carlang could be much bigger. Plus, it has the added benefit of being at surface with outcrop and minimal overburden, in addition to being very close to Timmins. We're on a road with power line. So we have an enormous resource. It's globally the 5th largest. And in terms of how the market is valuing us, it's at a deep, deep discount. So let me just pull together, right? 2022, this excitement last year, we tripled our land package and we made significant discoveries. We discovered the W4 extension. This is what we were talking about today. We discovered the Carlang and the A zone, so the first 20% of that 10-kilometer mineralization. In addition, south of the Shaw Dome, down on the Groves property, we discovered that the Matthew goes into the bedrock. So last year was a great advance year for our exploration. This year is that year of showing the details, seeing the details. So we delivered on that enormous billion-ton resource in February. We came out with the preliminary results of our clean nickel work, which continues in the lab. And that, again, is a real focus of us when we're talking with levels of government, and was a big part of my last 2 days in Ottawa, talking about the clean nickel. And then on Monday this week, we delivered on our high-grade updated resource for W4, which we're really excited about. So we've got additional clean nickel work coming, and then we've got to figure out sort of what our focus is for the second half of this year. But we're sprinting along, and we're really proud of what we've accomplished on the 18 months we've had this company out in public, and we are delivering on everything we've been saying. That's the great news. Here's the stock chart. Great news for people who aren't yet investors. So despite having done these incredible developments over the past 18 months, the stock really hasn't moved much. This speaks to where our valuation is at, and we showed you the comparables earlier, where we are by far the cheapest undeveloped nickel project in the world. So we have relatively tight flotation, just over 50 million shares outstanding. A bunch of it's held by insiders, friends and family. And we have cash on the balance sheet. So we're still sitting on a pretty good cash position right now. We can afford to run the sort of table stakes of the company for a long time. But again, we're going to have to figure out what we're up to in terms of developments, in terms of additional work and what we want to be delivering on for the different tracks. But right now we're in a very good cash position. So Cam, that was a quick drive-by. If we want to get into the questions now.
Yeah, absolutely. Thanks, Sean, for the great presentation. And Paul, just as a reminder to everyone in the audience, if you would like to ask any questions, please do so in the chat found on the right-hand side of your screen. The first question that I have, though, is how much more potential do you think that the W4 has?
Paul, you want to jump in on that?
Sure. I think, it's hard to quantify how much potential, but I think by just looking at what we've added over the past next level down, so basically we replicated the same height from surface of the original W4 down to this new resource included W4, you see it doubling. And I could see for each basically 250 meter block of W4 that we're looking at another 1 million tons. And we certainly haven't closed it off. We certainly haven't shown that it stops. So I'm very confident that we'll see that continuing as we go to depth.
Mm-hmm. And again, Paul, we're all within right now 500 meters of surface, right? So
we're all very close to surface. It's all ramp accessible. Some of it, as you'd see in our resource estimates, open pittable with a very good open pit grade. And we're talking open pit grades of over 1%. That's a good open pit.
Mm-hmm. Mm-hmm.
Absolutely. Great. The next question is, what's the next step for W4?
Well, that's a great question. That speaks to sort of where we go from here with the two tracks. So on both of the mineralized zones, we now have resources, which are the first 43-101 step, really. So we've got to figure out how we advance. Obviously, we want to move to PEA on both of them. I want to start pulling together our concept of how we intend to move this forward to production. And our next step would be PEAs on each of the Carlang A zone and the W4. But we've got to sort out timing on that. And that is, something we'll be talking about in the coming months.
Absolutely. Great. The next question is, what are your financing plans?
Right. This answer is meshed with the last answer. So we've got to sort out what we're doing next on each of the tracks. I had mentioned we've got the money to run the company for a long time, but obviously we're in this business to keep that pace going, which I was saying we've been at a breakneck pace for the last 18 months in terms of saying we're going to do things and then delivering on them. So I'd anticipate that we're going to have another round of saying we're doing things and then subsequently delivering on them. And feeding into that would be a requirement to sort out how much we can raise and what we want to do. So the first step is, now that we've got this resource out the gate, we want to, well, obviously we're going to get the resource posted in 45 days, but we're pulling together what our plans are in terms of advancing along both of these tracks, and each of those plans will have financing requirements. So we've got cash to run the business for a long time, but right now we're sorting out what specifically we want to get done, and meshing with that will be financing requirements.
Right. Okay. This next question comes from Kieran in the audience, and he's just wondering, how are you so confident that W4 is going to go into production in 3 to 4 years before PEA, feasibility study, et cetera?
Right. So very importantly, we're talking about an ore source in a camp which has had other historic mining. So our understanding right now with the resource is a very good understanding of the W4. We began application for the permits last year. Paul mentioned next step is we're waiting on the mining lease. So we're talking about permitting an ore source and advancing the ore source along, because there's the potential for processing nearby or a little further nearby in Sudbury. So our confidence of keeping pedal down and being into production in 3 to 4 years is around how we're talking about a pretty straightforward permitting process for an ore source in an area with lots of historic mining, with a nearby permitted, already running processing facility. So it's a little different than your usual sort of greenfield. We've found a mineralization and we plan to wave our arms and be in production in 3 to 4 years. We've got a lot of things going for us in terms of being in the right place, nearby existing infrastructure, and a relatively straightforward thing we're attempting to do. But it still takes an aggressive pace. So we're targeting 3 to 4 years for production, but there's a lot more behind that than just a junior miner saying that I'm in the middle of nowhere and I hope to be in production in 3 to 4 years.
Fair enough. Okay.
Plus, just to add, Cam, we've done it before.
Yeah, exactly. Sorry. Yeah, yeah. We have discovered and permitted and developed and then operated mines before, so we kind of know what we're talking about.
Oh, fair enough. Absolutely. Jordan has a number of questions. I'm just going to break them up one by one at this point. First is this: how much cash does EV Nickel have on hand, and do you intend on doing a capital raise in 2023?
Right. I said before, our last quarterly disclosure on the slide was about 500,000, all in cash. I said in terms of financing, we can ride that cash and run the G&A for a long time, but that's not what we're in the business for. So we're going to pull together what we're going to do, and then what we're going to do will need to mesh with our financing plans. So more to come on that.
Absolutely. The next question that he has is, what's the plan for the rest of the year in terms of drilling?
Same. So we're going to, it's an obvious sort of the moves from here include advancing our 2 tracks along. In addition to, we're very excited about the high grade potential around the Shaw Dome. So that would be beyond just the W4 we've talked about. In addition, on the Car Lang, there's obvious drilling on the A zone to bring that all into indicated, but then also better understanding up the full Car Lang trend. And this is before we even get into other large scale targets on our 30,000 hectare land package. So in terms of more drilling from here, it will be obviously part of advancing along the 2 existing tracks, plus exploration drilling beyond there. And that's all part of our pulling together what our technical plans are from here. Right.
And then he's just wondering, would toll milling be an option down the road to bring some cash flow into the company?
Yes. So I've said 7 kilometers away, there's an existing mill owned by one of our investors. That's a very interesting potential opportunity. And beyond that, again, we're in a major mining camp just north of another major mining camp, a nickel camp in Sudbury, which is looking for looking for ore, I should say. So in terms of toll milling, using someone else's processing, that's a very real option. And that's, again, one of the reasons why we're talking about 3 to 4 years for potential production, because we're really advancing an ore source with the intention that there's other ways we can leverage other existing infrastructure.
Absolutely. Lionel has a question. Have any MET tests been completed?
Yeah. So Paul, do you want to talk about the MET work we have underway?
Sure. Yeah. MET tests have been in progress for a while on W4, and we're doing some additional MET work included with the bioleaching study. So we do have some preliminary results in, and we're looking at how we can optimize the recoveries to ensure we capture every bit of the sulfide nickel that's available in the W4 deposit. I anticipate we'll have those results here in the coming weeks, so keep your eyes open. We'll release those as we get them finalized.
And it's important to note, we're not going from scratch on this because the previous owners had also done met work. So we're building off of that work that had been done before, doing a lot of optimization. In addition, again, the advantage of being in the Shaw Dome, where there has been historic production, much of it through, or some of it through the existing mill, it really is brownfield from that perspective. So in terms of, it's not just a crystal ball to be able to predict that we think we'll have good recoveries out of this ore. There's work that's been done before, and similar ores have produced nickel from them. So we hope to get those results coming, but we've kind of got our eyes open about them being good results.
Okay, great. Roberto has just asked this question. Is the company planning to produce battery-grade nickel, a refining facility, potentially?
Us developing a refining facility? It would be, yeah. So we have talked about the bioleaching work. If it continues to be successful, our R&D on that front will be in a position where we'll have a solution come out which we can then precipitate out the final product that the battery companies require. So that's our bioleaching work. A big part of that is not just the environmental benefit of not sending your stuff off for final refining, final processing to another part of the world, all the carbon cost attached with that. So environmentally, there's a big advantage there, in addition to commercially owning the sort of value chain down to the battery plant. So we've talked about that with bioleaching. That would be kind of what you're asking if we're getting into that final refining business, but not in so many words. But no, we do not have an intention to be the ones to build a new nickel refinery in Ontario, which is really sort of a screaming need, because frankly, we've talked about this, the Sudbury production, when I say it's 60 to 70,000 tons of nickel a year, if you dig into that, you realize that the Glencore final product actually comes out in Europe when they send it to Norway. Similarly, the Inco or the Vale final product, some of that gets sent to Wales for a final product to come out the door. So are we going to be the ones who step into that sort of market void of building a refinery in Ontario? I don't think that's the case. But our bioleaching is very interesting because if it continues to be successful and we're able to pull that all together, that could be us sort of jumping right to that final product.
Great. Okay. Kieran has another question. It's clear that EV nickel is undervalued. What's the plan to help that value become realized?
Yes, it is undervalued, as you just heard. And, a big question, obviously, is why is that? Perhaps it's because we've been so focused in the past 18 months on delivering these things and adding pieces to the story. The way I stand, my sense is the way to really add value to shareholders, the way to run a company like a shareholder is to focus on continuing to add value through the assets. You've heard the term, mining the market. We've spent less time sort of market facing versus trying to advance along and be building up the thing we have, and probably to the detriment of our public valuation versus getting that story out. So I say this, we're going to continue to get the story out. We're going to try new ways to get the story out and be able to attract people to what we just shared, which is this deep, deep discount for what we have created and how little it's valued right now by the market. So that's a bit of an explanation of how I think we got to where we're at. Where we're at is very compelling, deep discounted valuation. How we're hoping to change that, in addition to continuing to add value, is get that word out, get more investors in, and begin to change that stock chart.
Right. Justin wants to know if there's been any more progress with talks with interested automakers. Is there any ongoing dialogue, for instance?
Yeah, so dialogue continues. And I've said before, across a few areas, we've got automakers, we've got major miners, and then we have who I would say is big strategic investors. There are some large private equity funds, pension funds. So dialogue across all three of those continues. Also in that last group would be sort of the metals traders and folks who sort of get the nickel business and are participants in the nickel business. So dialogue continues. We're very good at dialogue, but I'm hoping to begin seeing some results of the work we're doing in each of those areas, because that's all part of getting the word out. And frankly, those groups come to it with an even better understanding of what the value is of the thing we're trying to build. Plus, they have that long-term approach. And frankly, when you look at the value of what we've been building, so the actual what's in our assets, and if you take a long-term approach, it's even more compelling. So dialogue continues with the automakers plus other strategic groups.
Absolutely, great. Roberto was wondering just about the bioleaching process and if it's going to need any type of industrial gases like oxygen or nitrogen.
It will. So Paul?
Yeah, well, basically with the bioleaching, yes, the bacteria, they consume oxygen. That's how it runs. But there are several ways to handle that. One, you can use just the ambient air concentration of oxygen, and you aerate your vats and provide the bugs with the required gases that they require. Second way is that you could produce some type of concentrating plant, be an oxygen plant or potentially a CO2 plant, whatever will benefit and result in the greatest recoveries from the bioleaching. But yes, there will be some, but the simplest one is just to use air.
Ambient air, yeah.
Ambient air.
Fair enough. Well, listen, gentlemen, that looks like all the questions that we received for today. So I want to thank you for coming on and going through such a great presentation and Q&A. Of course, I also want to thank everyone who's joined us and participated in the Q&A. But Sean, Paul, I want to pass things back to you before we close off for the day.
Yeah, thanks. And again, hopefully you're hearing sort of the energy and excitement from us as we and our team are so glad to have gotten where we are. So over the past 18 months, I think we've frankly been sort of crushing it on our deliverables, tripling the land package, making the discoveries, and now Paul and his team delivering on the second of our two resources going down the mineralization track. So we've had great exploration success, and we're delivering there. In addition to our R&D work sort of outside of the drilling in the labs, we've had great progress there, and there'll be more news on that front as well. So it's a very exciting time for the company. We've spent a bit of time talking here about how we need to get this story, the exciting story, out into the market better. But in the time being, representing such a deeply, deeply discounted value, I think it's a tremendous opportunity, especially for new investors coming into the story, because the thing we are building is of real interest to the market. And as we were saying before, that realization of what is required in the nickel market is an enormous challenge. So we're trying to build a thing to deliver in there. We're continuing that work, and hopefully you'll be beginning to hear more about us in the financial markets as well as we begin to have our valuation better reflected.